Hi everybody, welcome back. My name's Andy. So today we're going to be going through what makes up a grade A within PulseFlow. So let's look at an alert. Here we are. So we are looking at IMX, a gaming coin. And as you can see, grade C came 4 hours ago, which is going your own way. Now, if you don't understand what I'm talking about, it means you've not watched the previous videos, which are not long. So I'd quickly bob back and catch up to find out what all of these acronyms mean. So anyway, we've got going our own way. We've got a grade B, which in this case is the VWAP strategy. That's something I'm going to cover in the future. And we're concentrating on grade A, which is an FVG plus BOS, which, as you all know because you've watched those previous videos, is a fair value gap together at the same time with a break of structure. Let's go look at the charts and it'll all make sense. Here we are on the IMX chart. The yellow arrow represents the time that the grade A alert came in to PulseFlow, and the dashed line here in yellow represents the price it was. So let's look what was happening. IMX is in an uptrend, so on the higher time frame we're in an uptrend. We've been having a retracement and you're trying to go long, and what we do is we get the VWAP, the white line here is the VWAP. We get the bounce from the VWAP, but we want more confirmation. We're not just going to trust it because it could very easily fall through. We wait for that break of structure. We go past the other previous high and we form a fair value gap. And that's when grade A says, boom, alert comes into PulseFlow. You have a VWAP bounce. You have a fair value gap with a break of structure. You should go to the chart and check this out. Now, because we know we've had the fair value gap with a break of structure, it shows us that the institutional money is changing direction back up to the uptrend. But what I like to do is for the price to come back into the fair value gap to get some of that trapped liquidity. The reason I do that is it lowers my risk reward, or it lowers my risk and heightens my reward, which is always a good thing. So as you can see, the price came from that yellow line down into the fair value gap, grab some liquidity. You then get that confirmed reversal back up. You have your higher low and you're in. By now you would have had 3%. It's gone back down into the newest fair value gap and it's trying to figure out what it should do. But 3%, not bad. Don't get greedy. Always take the profits. Take that. Even if you take partial profits, take the partial profits. So why does this work? Because we are not rushing into any trade. We're not FOMOing in on any one specific Confluence. We're also making sure that this particular coin is trading not with Bitcoin. So it will be less affected by any sudden moves Bitcoin makes, which is actually very important. We've then got our foundation in place. So we've got the next Confluence, which is it's a VWAP, and the bounce is confirmed when we get the fair value gap plus a break of structure, plus the reversal and then the higher low. So what we're doing is we are taking the guesswork out of trading and we're lowering our risk. And that's what we all want to do when we trade. You're always going to get losing trades. So what? It doesn't matter as long as you're winning more than you're losing. And you'll learn lots from your losing trades, believe me, when we all go in too early. In the next video, I'm going to be going through something called POCs, or points of control. I have referenced them many times in previous videos. And points of control you can all put on your trading view charts, and they're very, very powerful. So my name's Andy. Please subscribe, like and share, and I'll see you in the next video. Bye bye.